What's up guys, welcome back to my channel. So this week is the earnings season and a lot of companies will release their earnings. So this week I want to talk about some of the companies that will have their earnings of second quarter soon. Hope that will give you guys some ideas about whether you want to trade in this earning release period. So today I want to talk about TD Ameritrade. Ticker symbol is AMTD. So TD Ameritrade will release their earnings for second quarter tomorrow. Here I will share some of the research findings I have. If you guys also have a TD Ameritrade account, you can see whether you want to trade TD stock in TD platform. So TD Ameritrade was founded in 1970. It has been growing and become a very special broker-dealer among its competitors. It focuses on the technical traders and provide a variety of technical tools on their platform. So recently, TD Ameritrade has acquired Scalp Trade to increase their customer base, and last year it was acquired by Charles Schwab. A lot of analysts I found they say the merger of Charles Schwab and TD Ameritrade created a synergy effect and it will help TD's business. So TD Ameritrade's revenue source can be divided into asset-based revenue and transaction-based revenue. Asset-based revenue means they earn money through interest rate or stock lending or from the margins they gave to their customers. And the transaction-based is the commission fee they have used to charge people. So since currently they also adopt zero commission, so that part of revenue source has been cut. And also they earn money through the rebate of customers' order flow that we may know that all the broker-dealer basically do that. They send the order flow of their retail customers to the market makers so that they can make money from the market makers. So I think this revenue structure also is the reason that the stock price has been on the lower end recently. Their current stock price is $36, which is not far away from their 52 weeks low, $27. So after we know the company's business model, maybe now we look at the industry to have a broader pictures about what's going on with the competitors. So the broker industry is pretty fragmented that everybody can have a piece of cake, no matter TD Ameritrade or Charles Schwab or their competitors like Interactive Brokers or the new disruptors Robinhood. And in this industry, it's hard to have a monopoly company like what Amazon did in the online shopping sector. So looking at this industry, there's not one of the broker-dealer or the product that become a must for the customers. I think in order to see whether the company have a high growth potential or it's important to know whether the product is a must to the customer. For example, to me, Google is a must because whenever I want to search something, I'm very reliant on Google platforms, and also because Google have a lot of powerful extensions that keeps me from using other platforms. So not to mention it, they also have Gmail and YouTube, which is the daily tool I will use. So for me, Google is a must. But for retail customers like me who already have the broker-dealer accounts like Robinhood, Webull, and also other personal finance accounts like Stash, Acorn, Betterment, and even Cash App, TD Ameritrade is not a must for me. So as for the growth of the company, they want to attract more young people like millennials and Gen-Z. But at the same time, the competition is intense. A lot of young people would rather choose Robinhood, who has created buzz in this industry and become a totally disruptor. In that way, I'm not sure about the growth of the company. I know they already have a large customer base of active traders, but whether they can continue acquiring new customers, that's a key success part for their stock growth. As for the moat of the company, I think they have a narrow moat because the tools they provided, it can easily be copied by other broker-dealers. All those different indicators are replicable, so that shows there's no secret sauce of TD Ameritrade. But one thing they have an advantage because I talked to some traders in the New York Trader Expo last year, And I found a lot of them learn trading through taking classes, and their teachers use TD Ameritrade's platform as an example. So that's why they stick to the platform, because they learn it that way. So through this method, by collaborating with a lot of stock trading teachers, they have some loyal customers because who have already get used to their platform, and if they want to start a new broker-dealer account, the switch cost seems high. And lastly, I want to talk about the risk. I think the risk potential is high. As mentioned, the disruptor like Robinhood has created a revolution in the industry with zero commission, and after that, other broker-dealer also announced zero commission, and it shows that a war in broker-dealer has begun, and this area has already become a red ocean. I find it's really hard to compete in the red ocean situation where companies just battle with each other with lower price, and lower price will actually hurt their business because of less profitability. And also because now I see Cash App is also trying to do their investing sections and to a lot of general retail investors where they have a 9-to-5 job, they don't have to look at the candle chart all the time. Despite the fact that TD Ameritrade may have lower growth rate, I do think it's maybe a good dividend with the current 3.4% dividend yield. But for me personally, if I wanna invest it in a stable dividend stock, I would choose AT&T. And if I want looking for a high growth stock, I would choose something like Facebook or Amazon or Google. But I will definitely pass on TD Ameritrade this time. But I still think it's interesting to analyze this broker-dealer stock because as a retail customers, it's better for us to understand why the broker-dealer provides this product to us, whether they just want to making money from us or they really care about their customers. The earnings will be tomorrow, and I will expect they will be lower than expectation from Wall Street because they sold their company 26 billion to Charles Schwab, and the current market cap is 19 billion. I think the sellers always be a little bit smarter than buyers because they know more information. They know better the asset they're being selling. Yeah, that's just my thoughts about AMTD today. Hope you guys find it helpful. If there's anything interesting in their earnings release, I will keep you guys updated. So thank you for watching, and I will see you very soon. Bye!